Welcome to the ultimate guide to a 10 times richer future. Today we'll journey through the fascinating world of personal finance, covering various topics. Each topic in this video is a stepping stone on the path to financial prosperity, filled with practical, actionable advice you can start implementing today. So, whether you're a recent graduate, a seasoned worker, or someone looking to make their money work harder, this guide is for you. Stay tuned to discover the 25 early steps to a 10 times richer future. So grab a cup of coffee, sit back, and let's step into our first strategy. It's time to start living richer, smarter, and more abundantly. Let's dive in. Kickstart your journey to wealth with Geoarbitrage. Picture this. You're living in a quaint, cost-effective town, sipping on your morning coffee, all while earning a big city salary remotely. That's Geoarbitrage in a nutshell. By taking advantage of geographic differences in cost of living and income opportunities, you can turbocharge your savings like never before. Imagine living in a place where your dollar stretches further, where you can afford a comfortable lifestyle without breaking the bank. All the while, you're earning an income that's typical of higher cost areas. It's like having your cake and eating it too. This strategy isn't just for the digital nomads amongst us, it's a practical, savvy move for anyone looking to maximize their income while minimizing expenses. And in this digital age, it's more achievable than ever before. Geoarbitrage, a savvy move to jumpstart your wealth accumulation. Step 2 on the road to riches, dollar cost averaging. Now, imagine you're on a boat sailing on the high seas of the financial market. It's a stormy sea with waves representing the market's volatility. Dollar cost averaging is your calm, steady rowing rhythm, keeping you on course no matter how choppy the waters get. How does it work? Simple. You invest a fixed amount of money regularly, whether the market is having a sunny day or a thunderstorm. This way, when prices are high, you buy fewer shares, and when they're low, you buy more. Over time, this can reduce the impact of market volatility on your investment. It's like having an automatic pilot that keeps you sailing steadily towards your financial goals. No need for fancy market timing or crystal balls, just a disciplined, consistent investment plan. Dollar cost averaging, a steady, unwavering path to growing your wealth. Next up, a golden rule, time in the market. This rule is like the tortoise in the classic tale of the tortoise and the hare. It's slow and steady, but it wins the race. The idea is simple. It's not about when you invest, it's about how long you stay invested. Consider this. If you'd invested in the S&P 500 20 years ago and stayed invested, you'd have seen roughly a 300% return on investment. Now, if you'd tried to time the market and missed out on the best 30 days of that same period, your return would drop to just 30%. That's a massive difference, and it goes to show that patience really does pay off when it comes to investing. So don't be the hare trying to hop in and out of the market at just the right moments. Be the tortoise, stay in the race, and watch your wealth grow over time. Remember, it's not about timing the market, but time in the market. Moving on to a favorite of many financial gurus, index fund investing. Now here's a little secret. Index funds are the unsung heroes of the investment world. They quietly go about their business mirroring the market, providing investors with a steady, reliable return. They're like that dependable friend who's always there when you need them, never demanding the spotlight but always delivering. Here's the scoop. Index funds are a type of mutual fund, or ETF, that aims to replicate the performance of a specific market index. They're low cost, and that's a big deal because the less you pay in fees, the more of your money stays invested, working for you. The beauty of index funds lies in their simplicity. You don't need to be a Wall Street whiz kid to understand them or benefit from them. All you need is a little patience and a long-term perspective. Index fund investing, the tortoise in the race, slow and steady wins the wealth race. Now let's delve into a taxman's nightmare, tax-advantaged accounts. Picture this. You've got a golden goose laying golden eggs, and the taxman can't touch them. That's essentially what tax-advantaged accounts like Roth IRAs and health savings accounts, or HSAs, are all about. These accounts let you contribute money that grows tax-free over time. And when you're ready to withdraw, that's right, you guessed it, it's tax-free too. Imagine all the growth, all the gain, and not a penny given to the taxman. It's like having a secret garden where your wealth can grow, untouched and unbothered. So, how do you make the most of these accounts? You maximize your contributions, of course. The more you put in, the more you'll have growing tax-free. It's a simple yet powerful strategy for wealth accumulation. Tax-advantaged accounts, because who doesn't love a tax-free ride to riches? Next on our financial roadmap, asset allocation. Picture this. Your investment portfolio is a party, and every asset is a guest. You wouldn't want all your guests to be wild risk-takers, right? Just like you wouldn't want them all to be cautious wallflowers. That's where asset allocation comes in. It's about creating a diversified mix, a balanced guest list of stocks, bonds, and other assets, based on your appetite for risk. High-risk stocks might bring the fun, but bonds are there to calm things down when the stock market gets too rowdy. And just like any good party, your portfolio needs a check-in now and then. That's where rebalancing comes in. If stocks have been having a blast and taking over, it might be time to invite more bonds to keep things in check. So remember, asset allocation, it's your portfolio's personal bodyguard. Our next stop, a silent wealth killer, inflation. Now, inflation is like that sneaky little mouse that nibbles away at your cheese, or in this case, your hard-earned money. It's an economic phenomenon that erodes the purchasing power of your dollars over time. Imagine a world where a cup of coffee costs $1 today, but next year that same cup costs $1.10. That's inflation in action. But fear not, for every problem there's a solution. The key is making investment decisions that outpace inflation. Think of it as a race. Your money needs to run faster than inflation to increase in real terms. Investing in assets like stocks or real estate, which historically have provided returns above inflation, is one way to do this. Remember, inflation is a marathon, not a sprint. It's about consistently staying ahead, not just keeping pace. Understanding inflation, because staying ahead of the game is the name of the game. Now, let's talk about a potentially lucrative perk, employer stock options. Imagine, if you will, a company that offers its employees a unique opportunity to not just earn a salary, but also to become part owners. This is the reality of employer stock options and employee stock purchase plans, or ESPP for short. These programs allow employees to invest in their company, often at a discounted rate. Think of it as a win-win situation. The company gets to raise capital, and you get a slice of the corporate pie. But like any financial decision, it's crucial to understand the details. How much can you invest? What's the vesting period? Are there any tax implications? Remember, these options are part of your compensation package. They're not just additional perks, but opportunities to increase your net worth. So next time you're negotiating your employment contract, don't forget to ask about employer stock options. Employer stock options, turning your job into a wealth-building tool. Next up, your secret weapon in the wealth-building arsenal, networking. This is the art of creating and nurturing relationships in your professional circle. It's like cultivating a garden where the flowers are opportunities and the seeds are the connections you make. Think of your network as a web of mentors, peers, and industry contacts. These connections can open doors to job opportunities, offer insight into industry trends, and even pave the way for career advancements. It's not about being overly opportunistic, but rather about being genuinely interested in others and finding mutual ways to support each other. Remember, it's a two-way street. Be ready to offer help, advice, or connections to others in your network. The more you give, the more you are likely to receive and return. And don't forget, networking is not a one-time event, but a continuous process. So keep cultivating those relationships and watch as opportunities bloom. Networking, because sometimes it's not just what you know, but who you know. Now, let's explore a path to wealth that's in your wallet. Credit card rewards. Picture this, you're making purchases, but instead of just spending, you're also earning. Intriguing, right? Here's how it works. Many credit cards offer rewards programs. These could be in the form of cash back, travel points, or other perks. The trick is to use your card strategically. Pay for your essentials, your groceries, gas, bills, and then pay off the balance at the end of the month. This way you avoid interest charges. But remember, this isn't a free pass to overspend. The goal is to earn rewards on what you'd normally spend, not to spend more to earn rewards. It's like a little game you play with your credit card company. Each swipe of the card, each tap on the payment terminal is an opportunity to earn. Credit card rewards, turning everyday spending into earning. Next, a hotly debated topic, renting versus buying. This decision is more than just a question of personal preference or lifestyle. It's a strategic financial move. Now, the traditional wisdom might say, buy a house, it's an investment. But the reality is, it's not so simple. When you buy a home, you're tying up a significant amount of capital in one asset. This can limit your financial flexibility. On the other hand, renting can often mean lower upfront costs and the flexibility to relocate when needed. But here's the kicker. The decision between renting and buying isn't a one-size-fits-all answer. It depends on your personal and financial situation. Factors like your income stability, the housing market in your area, and your long-term plans all play a role. So, is it better to rent or to buy? Well, that's a question only you can answer based on your unique circumstances. Renting versus buying, a personal decision with significant financial implications. Now let's discuss a skill that can add zeros to your paycheck: negotiation. You see, negotiation is more of an art than a science. It's about understanding your worth and not being afraid to ask for it. But it's also about knowing the market, understanding the value you bring, and being able to articulate it. When you're negotiating your salary or benefits, it's essential to do your research. Know the average pay for your role in your industry and your geographic location. Understand the company's compensation structure. And don't forget to consider other benefits that may be just as valuable as a higher salary, such as additional vacation time, flexible work hours, or increased retirement contributions. Remember, the best negotiators are those who come prepared, know their worth, and aren't afraid to ask for what they deserve. So don't sell yourself short. Negotiating salary and benefits because you're worth every penny. Next, let's talk about turning passion into profit, side hustle to business. You know that thing you do for fun on the weekends, that hobby you can't get enough of? Well, it could be more than just a pastime. With a little bit of business acumen, your side hustle could evolve into a full-fledged enterprise. The beauty of a side hustle is that it often stems from a genuine interest or skill, making work feel less like work and more like getting paid to do what you love. And when you love what you do, you're likely to put more energy and creativity into it, which can result in increased income and potential for long-term growth. Of course, it's not without challenges, but with determination, strategy, and a dash of courage, your side hustle could become your main hustle. Side hustle to business, because the road to wealth can be paved with passion. Next on our list, a hidden wealth builder, social capital. Ever heard of the phrase, "It's not what you know, but who you know"? Well, that's a nutshell definition of social capital. It's about leveraging relationships, networks, and connections to open doors to opportunities often hidden from public view. Think of it as your personal key to a treasure chest of exclusive investment opportunities, business ventures, and insider knowledge. It's like being in a secret club where the membership fee is your ability to build and maintain relationships. The beauty of social capital is that it's accessible to all and can often be more valuable than the heftiest bank account. It's about being active in your community, nurturing relationships, and creating a network that can provide mutual benefits. It's not about using people, but about building genuine connections that can lead to opportunities for everyone involved. Social capital, your ticket to exclusive wealth-building opportunities. Next, the foundation of all wealth. Health. It's a simple truth, but one that's often overlooked in the pursuit of financial gain. Your health is the most valuable asset you have. It's the engine that powers your productivity, drives your ambition, and fuels your success. Without it, all the money in the world means nothing. Consider this: a robust health can extend your life expectancy, giving you more years to enjoy the fruits of your labor. It can enhance your quality of life, allowing you to savor experiences that wealth alone cannot buy. Good health also means less money spent on medical bills and more saved for future investments. In the grand scheme of wealth building, maintaining your health is not an expense but an investment in a future where you're not just rich in financial terms, but in life's most precious commodity, time. Health is wealth because without health, wealth means nothing. Let's delve into an additional powerful tool that can significantly amplify your wealth. Leverage for growth. When used wisely, leverage can be a game changer in real estate or business investments. It's essentially using borrowed capital or debt to increase the potential return of an investment. However, it's crucial to understand the balance between risk and reward in leveraging. While it can amplify your returns, misusing leverage can also amplify your losses. This is why careful planning, diligent research, and risk management are key when using leverage. Just like a seesaw, balance is everything. So remember, leverage for growth, because sometimes you need a little boost to reach the top. But always ensure you're not risking more than you can afford to lose. As always, it's not about getting rich quick, it's about building sustainable wealth over time. Let's shift our attention towards a long-term, highly rewarding investment. Investment in skills. This is an investment that never depreciates. Rather, it appreciates over time and pays dividends throughout your life. Staying ahead of the curve by continuously improving existing skills and acquiring new ones is pivotal to remain competitive in today's dynamic job market. This not only increases your earning potential, but also opens doors to various opportunities. Remember, skills aren't just about mastering the latest technology or being proficient in a foreign language. Soft skills like leadership, communication, and problem-solving can be equally beneficial in propelling your career forward. The world is constantly evolving, and lifelong learning is the key to keep up with it. It's important to remember that the best investment you can make is in yourself. So embrace the mantra of investment in skills, because when you invest in yourself, you're investing in your richest future. As we move forward, let's explore a tool often overlooked in financial planning: insurance. While insurance is primarily seen as a protective measure, it can also be a powerful tool for wealth accumulation when used strategically. Various insurance products, such as whole life insurance and annuities, for instance, can be incorporated into your financial strategy to grow your wealth over time. Whole life insurance, beyond its protective element, can build cash value that grows tax-deferred. This can be borrowed against or even cashed out, providing a flexible source of funds. On the other hand, annuities can provide a steady stream of income during your retirement years, ensuring you're financially secure even when you're no longer earning a regular paycheck. But remember, insurance should not be viewed solely as an investment product. Its primary purpose is to provide a safety net against unforeseen events that could otherwise derail your financial plans. So embrace the concept of insurance as a financial tool, because sometimes the best defense is indeed a good defense. Next, we're going to delve into a key aspect of compensation: vesting schedules. These schedules are crucial to maximizing the value of your employer retirement plans and stock options. So, what is vesting? In simple terms, vesting is the process by which you earn rights to the benefits of these plans over time. Understanding the implications of vesting schedules on your financial planning is a must. For instance, if you leave a job before your stocks or 401k contributions are fully vested, you may lose out on some or all of those benefits. Vesting schedules are also used by companies as an incentive for long-term employment. By tying a portion of your compensation to a future date, employers create a compelling reason for you to stick around. So it's crucial to understand the vesting schedules of your benefits and factor them into your financial planning. That's why we say understanding vesting schedules, because timing is everything. Next, we're going to explore a path to wealth that's close to the heart: philanthropic investments. Many of us dream of not just building wealth, but also making a positive impact in our world. That's where philanthropic investments come into play. These are investments in impact ventures or social enterprises that align with your values and can provide financial returns alongside social benefits. They come in many forms, from investing in a local small business to funding a startup that's working on a cause you care about. But how do philanthropic investments fit into your portfolio? Well, these investments can offer diversification and potentially even tax benefits, depending on your jurisdiction. But perhaps the most rewarding aspect of philanthropic investments is the satisfaction of aligning your wealth building with your values. It's about making your money work not just for you, but also for the causes and communities you care about. So remember philanthropic investments, because wealth is not just about having, but also giving. Let's shift gears and talk about a wealth builder that works even when you're not: passive income streams. This is income generated with little to no daily effort on your part, and it can come from various sources. Think royalties from a book you've written, earnings from affiliate marketing, or profits from selling digital products online. Passive income is not just additional money, it's about financial freedom. It can provide a safety net, give you the flexibility to pursue passions, and even accelerate your journey to becoming 10 times richer. Imagine earning money while you're sleeping or on vacation. That's the power of passive income. But remember, creating these streams often requires upfront work or investment. So bear in mind, passive income streams are not a get-rich-quick scheme, but a strategic move towards financial independence. So why not let your money work for you even when you're not working? Passive income streams, because who doesn't love earning while sleeping? Now let's delve into a topic that's often overlooked but crucial for preserving your wealth: estate tax planning. This is the process of organizing your assets to minimize the impact of estate taxes and ensure a smooth transfer of wealth to your heirs. These taxes can take a significant chunk out of your wealth if not planned for properly. So understanding the implications of estate taxes on your wealth is vital. It's never too early to start thinking about estate planning. The sooner you start, the more options you'll have for reducing estate taxes and making sure your hard-earned assets end up where you want them to. From setting up trusts to making annual tax-free gifts, there are many strategies you can use. Remember, estate tax planning isn't just about your legacy. It's about ensuring that your hard-earned wealth benefits those you care about most. Estate tax planning, because your legacy deserves careful planning. Let's shift gears and explore an alternative investment avenue: peer-to-peer lending, or P2P lending as it's often referred to. This is a method where individuals lend and borrow money directly from each other, eliminating the need for traditional financial institutions as intermediaries. Platforms like Lending Club, Prosper, and others have made this a viable investment option, often offering higher returns than traditional fixed-income investments. However, like all investments, P2P lending comes with its own set of risks, including credit risk and liquidity risk, which investors need to be mindful of. By investing in P2P lending, you're essentially becoming a bank, lending money to individuals in return for interest payments. While this can be a lucrative venture, it's important to understand that not all borrowers will repay their loans, so diversification is key. Allocate only a small portion of your investment portfolio to P2P lending to mitigate risk. Peer-to-peer lending, because sometimes the best opportunities are in helping others. Now let's talk about a tool for the digital age: financial software. Technology has transformed every aspect of our lives, including how we manage our finances. With the help of financial planning software and tools, you can track your spending, manage your investments, and plan for your future goals all in one place. Tools like Mint, Personal Capital, and Quicken have features that allow you to view all your financial information in one place, making it easier to see the big picture and make informed decisions. Gone are the days of manually tracking each penny or sifting through piles of paper statements. Today's financial software can analyze your spending habits, provide insights into your financial health, and even suggest ways to optimize your savings and investments. In essence, these tools put the power of data-driven decision-making at your fingertips. So don't shy away from integrating these digital tools into your financial strategies. Utilizing financial software, because in the digital age, your wealth should be at your fingertips. Finally, a trend that's here to stay: sustainable investing. This approach is all about incorporating environmental, social, and governance factors into your investment strategy. It's not just about making money, but also about making a difference. Sustainable investing allows you to align your financial goals with your personal values, and the best part, it can potentially enhance your returns. In the past decade, we've seen a significant uptick in the growth of sustainable investing. More and more investors are realizing the potential of this approach and are choosing to invest in companies that prioritize ESG factors. This isn't just a passing trend, it's a shift in how we think about investing and wealth building. The satisfaction of aligning your wealth building with your values is immeasurable. You're not just growing your wealth, you're contributing to a better world. You're using your financial power to support companies that are making positive changes in our society and environment. Sustainable investing, because your wealth can be a force for good. And with that, let's wrap up our journey towards a 10 times richer future. So there you have it, 25 things to learn early, and you'll be 10 times richer in the future. From leveraging geoarbitrage, understanding the power of dollar-cost averaging, to grasping the importance of time in the market, We've covered a lot of ground. We've also delved into index fund investing and maximizing tax-advantaged accounts. We've highlighted the importance of asset allocation, understanding inflation, and making the most of employer stock options. Networking, taking advantage of credit card rewards, making informed decisions about renting versus buying, negotiating your salary and benefits, turning a side hustle into a business, leveraging social capital, and even seeing your health as wealth. These are all crucial parts of your financial journey. Thank you for watching. Remember, the journey to wealth starts with a single step. Be sure to like, share, comment, and subscribe to our channel for more financial wisdom. See you in the next video.